we're going to begin with a deep dive into the one of the world's most owned, if not the most owned stock in the world, and that is Apple. Goldman Sachs on this Friday says it is time to sell Apple stock. They believe that iPhone demand will continue to fall as consumers dry up. And also, this is interesting, Guy Adami, that lack of travel, the inability to physically be with each other might cause delays because engineers and product designers simply can't get together in the same room to finalize whatever it is they need to do. Your take on the Goldman call on Apple.
Yeah, and on top of that, maybe supply chain issues, which we haven't talked about, which all this sort of flies in the face of what Tim mentioned the other day, some of the news out of Taiwan Semi. So clearly a mixed bag. What's my take on it? Well, first of all, it's amazing. When people say anything negative about Apple, it's like you might as well be insulting somebody's first child. It's incredible to me how passionate people get about this stock, just generally speaking. In terms of the call, you know what? I sort of like it. I mean, the market's rallied considerably. You just said it leading in. I mean, we're only 15% now off the all-time high in the Dow in the S&P 500, which is remarkable. Apple has rallied significantly off the lows. The level that they talked about, Goldman Sachs, with the sell rating takes us back to the previous all-time high we made back in October of 2018. So given the run the market's had, given the potential headwinds, and the fact that I don't think people are going to be racing out to buy, $500 phones, let alone $1,100 phones, leads me to believe that this is not a ridiculous call. With that said, quickly, I guarantee in the earnings on April 30th, there are other analysts that come out and upgrade this name, and that's just the nature of the beast.
Yeah, Tim, we highlighted the other day how iPhone sales in China were better than expected, but I guess what I should have highlighted a little bit better is that what Goldman notes, they were still down 53% year over year.
Yeah, so look, it's a very interesting week on Apple, right? So Tuesday news, again, international iPhone shipments, of which 2.5 million look to be Apple, imputed straight out of China, a very important market for them. And today, Goldman says, hey, we're willing to throw a 17.7 multiple or an S&P multiple on Apple and 13.17 in terms of 2021 earnings. JP Morgan throws a 20 times multiple and a roughly a $16.50 per share number, and that tells you where you can see a divide, and that's interesting. I think for investors, that's really where you have to line up on Apple. Do you believe in the multiple? Do you believe in the multiple expansion we had last year? One of the things Goldman brings up is they actually see that the service revenues come under some pressure and maybe stagnate and don't grow, and that was really the re-rating dynamic. I know that the iPhone shipments were better last quarter. That was a surprise to the upside. But it's been about services. Interesting take by Goldman.
It is, BK, and I think Guy made a good point. I mean, sort of how dare you downgrade Apple? But listen, analysts, everyone's struggling to work in this environment. They may be a little bit slower on the uptake than they are. Do you expect to see more calls like this, whether it's on Apple or other of these big cap tech names that everybody's been buying for the last 10 years?
Yeah, I think so. What's kind of interesting about this, Sully, is I think it is a proxy for what's going on, right? We've had this disinflationary, deflationary shock. You've shut the economy down. And so if you look at Goldman's note, what they talked about was average selling prices, ASPs. Those are going to go down. Apple announced a lower priced phone. So if you start thinking about that economy wide, you say, okay, this is going to happen to every company out there. They are going to have to lower their prices for the products that they sell. And so you look at Apple, they're the first to do it. They're also the first to close their stores. They're the first to kind of lower the price on their phones. I think Goldman made a great call here. And I agree with Guy, like you're not allowed apparently to say anything bad about Apple. It's a company just like anybody else, and it is still subject to the economic winds.
Yeah, and what you're going to here, and I had to look something up in this call because Jeff Mills, they talked about what BK was talking about, average selling prices, ASPs going down. And I read this line. It said basically that the preference for less expensive devices could push Apple toward moving toward the inclusion of wave technology for most devices next year. I didn't know what wave was. I'm not going to lie. I looked it up. It's millimeter wave technology. The point is that this price battle, especially in an economy globally that is shaky to weak at best, could compress margins. Do you agree with the Goldman Sachs call? Yes or no?
So look, I'm going to take a little bit of a longer term point of view here. And I want to go back to something that we talked about on the show last week. And it was the Piper Sandler survey that talked about the brand and the power of the Apple brand. It surveyed 5,200 teenagers, and 85% of them own iPhones. So this is still a very powerful brand that people want to own. So that's good for the long term. They've proven that they can diversify away from iPhone. And if you just look at the chart right now, I think it's steadily above the 200-day moving average, actually closed above the 50-day. So from the short-term setup, the chart looks okay. Specific to the Goldman note, they talked about average selling price, but they also talked about unit sales growth. And they're extrapolating their numbers based on the recessions after the tech bubble and then after the financial crisis. So the question is, do we think this recession is similar, and you're going to see a similar pickup in sales after this recession is over? Does the nature of this recession make the snapback quicker? Does the stimulus that's being introduced make the snapback quicker? Frankly, we don't know, but we have to look for clues. I think it's interesting. If you look at international luxury sales as an example, in mainland China, Louis Vuitton, so over the last 3 weeks, sales there have increased 50%. Compared to that same period a year ago. So you are seeing some pent-up demand and consumers coming back to market for some of these higher priced goods after the worst of the virus is over. So is that a perfect analogy to what's going on with Apple? I don't know, but it could mean that once we get past the worst of things here, that consumers come back a little bit more quickly than we think.
And I agree with that. Certainly in terms of the China data, we've seen it all week. They had better import-export numbers. We've heard from Taiwan Semi, et cetera. But for me, the issue with Apple is where we came from with Apple. I mean, we went into the crisis with Apple effectively not only at all-time highs, but it moved 90% off of that June 2019 low, and the multiple had gotten to 21, 22 times forward. That's my biggest issue with Apple. Pricing perfection in this environment is really tough. And when you get back up near $300 a share, you're effectively pricing perfection, even though I am of the view, Jeff, that we actually do come back to a better demand cycle as we see Asia come online. I think we can impute that here.
Yeah, and those are all good points, Adami. But to Tim's point, I'll layer on to Tim's point. Look at where we've come from. People, a lot of our viewers have probably owned Apple for a long time. They have made a ton of money in the stock, and one does wonder, when you are facing such an uncertain future economically or whatever else, do you trim a little bit, take some of your profits? Because, what is it? You never go broke by taking profit. Apparently, my comment, Tim Seymour, left Guy speechless for once. Tim, I mean, you get my point. Going back to where you were, I know it's impossible. We've made so much money in the name. If you've owned it for so long, why not trim a little bit, put that in the bank, and maybe look for better opportunities elsewhere?
It's one of the stocks that investors universally, and we talk about this on the show, are you a trader, are you an investor? And Apple, for me, I am an investor. I will say that, on the positive side of the things that we haven't thrown into the argument today is the balance sheet, the ability through capital markets, and I know buybacks are a naughty word these days, but Apple's entitled to them considering the free cash flow that they generate. I think Apple is not something you run away from. I'm just saying, and I think we're talking about this in the context of this Goldman note, sure, makes sense. What's the multiple you put on the stock? I think people are long-term investors in Apple. It's okay to take a breath here, but I don't think you want to be trading it too aggressively. There's nothing about the news today that Goldman illuminated that should have you jumping out a window on this stock.
BK, I mean, fair enough. Don't jump out the window, especially on Apple, because but we don't know where things are going to go, but we do know that, I guess in some ways, Apple's not like other companies, right? I mean, Apple is is a utility. You have basically two choices of phones. You have to have a phone. So you're effectively buying a utility play in some ways, I guess.
Right. But you don't have to have an $1,100 phone. I mean, you have to have a phone. You don't have to replace it. You don't have to get the very new one. I mean, I think the reality here is none of us know, right? We don't know what it's going to look like on the other side. And I think to compare this environment to any other recession we've had, I don't think that's the right thing to do. You know, people are going to save more. I don't know if, I mean, Apple might be entitled to be doing a buyback, but it might not be very acceptable. You might see companies being rewarded for saving money and not doing a buyback. These are all the things I don't know. So I look at Apple, I look at the run that we've had. Why not take some profit at this point in time? You know, these are the times. You don't get bullish at the top. You get bullish when things are horrible. We were on a show a couple of weeks ago. We were talking about, hey, we could have this big short covering rally. Those are the times to get bullish, not today.